Chad, you have a lot of experience in Nevada, and yet you set out to establish your own Nevada exploration company, and you ended up with one asset that's sort of a surface oxide gold opportunity, and then two deep high grade targets. And to me, that's kind of representative of the opportunity that I see in the state as a whole right now, or at least some of the key opportunities. So can you just paint that bigger statewide picture a bit and why your portfolio is structured the way that it is?
Yeah, for sure. So it wasn't by accident that we added, a little bit of oxide and a little bit of deeper stuff into the portfolio. I think, value per ounce, oxide gold Nevada still, retains one of the highest value per ounce of any deposit type, at least in North America, if not the world. So we wanted to balance our portfolio with what my team's had success with deeper exploration in Nevada, actually. So at Premier Gold, we made a just under 2 million ounce discovery at 12 grams of a pretty deep target. And my VPX, my Corp as well, has been a mix of both oxide and deeper discoveries in Nevada over the last 10 years. So we wanted to balance that risk to our shareholders by having that near term, kind of very cheap and quick opportunity at our oxide project at Salina that we think could turn into something very valuable. While at the same time, we kind of like to think that the real blue sky for the company is actually with our deeper targets. That's where the future of exploration in Nevada is heading, is deeper covered targets. And while we take the time to properly explore those, we're going to be also fleshing out that shallow oxide opportunity as well. So it's a good mix, we think.
Absolutely. And for some of those deeper targets, I mean, you have clear analogs that you're chasing right in the vicinity of Carlin East, for instance. Can you describe a little bit about what some of the majors are finding in Nevada, and which could help maybe other people understand why I was so excited about the possibility of finding what you're looking for at Swift or Carlin East?
Yeah, most of it, you're very rarely seeing large, really, multi-million ounce, 5 million ounce open pits being found in Nevada these days. The state's fairly picked over. What we saw at Carlin East and Swift was analogs to some of the biggest new discoveries that are being made in Nevada, which would be the Gold Rush and Gold and 4 Mile discoveries, which were made on the Cortez Trend, which is directly on trend of our pipeline, or sorry, not our pipeline, our Swift project. So we'd be looking for deep, high grade potential such as that. We already have a drill hole at Swift that shows there's an active system. So I think it's for us, we saw that and we kind of jumped on that project immediately because it was something, the first battle is finding, is there even an active system, right? And we kind of already proved that at Swift. So that's very exciting for us. Carlin East is a direct Leeville analog. It's directly on trend within 3 kilometers of a 15 million ounce gold mine. Same gravity and geochem signature heading up across the project. And Barrick actually released in their Q2 financials recently that they drilled 20 meters of 35 grams per ton on the northern extension of the Leeville deposit, which is the highest grade, best intercept they've ever drilled at that mine. So we like to think that helps validate our belief that that system is continuing north. And there's never been a drill hole except our single hole in 2019 to test that target area, and we have 39 square kilometers. So I think those two guys are really exciting for very blue sky upside, and yeah, we're pretty excited to test them this fall.
I had one question come in from someone who wanted you to pick your favorite kid. So, I mean, you have two actual children, but I mean, in your portfolio, if you had to only drill one of them, which one would you drill?
Oh man. If I had to be honest, I thought you actually wanted me to pick my favorite kid.
That would be easier.
That's a dangerous proposition. I love them both. So I would pick, if I had to choose one or the other, I'd choose the Swift project. It has all the key indicators of a large buried Carlin type system. Hasn't been drilled in 30 years, and it was owned by Barrick that entire time. So I think there's a ton of potential there.
Cool. Okay. And then just quickly, you did start your presentation with a reference to one of your co-founders being a drilling company. These deep targets require one of the big risks is that you can kill yourself drilling, right? So just capture that, the opportunity that drilling contract gives you.
Sure. So, we raised, we have about just under 6 million in the treasury. But what the drilling contract brings to the table is that actually, we could have raised 8. If we didn't have the drilling contract, we would have needed to raise about 8 to get the same level of drilling. So it puts more money in the ground early. For example, we just finished our Salina program. We drilled 1,100 meters for an average of $10.34 a foot. So that's about half the price of what you're going to pay through, and, Steve, my partner, I mean, he's incredible, right? Like you go in and you say, okay, where, pretty much we just sit down and we figure out what the program cost him and then what we can do to make it work, right? But what it allows is it's a huge advantage for us. We pour more money in the ground. We've drilled 1,500 meters at Salina this year, and it only cost us about $150,000. So we've taken that to a discovery level of a project at this point at very little risk to shareholders. So
cool, thanks. I think that added some insight into the opportunity there. I'm going to move on before we run out of time here. Hugh, you're next up on my hit list. I mean, on my list of esteemed guests. Revival, the story has transitioned. I mean, you've been putting the pieces in motion for this for quite some time, but the story really sort of transitioned in the last 6 weeks. I may have the timeline a bit wrong there, where you announced and then filled this significant financing, put a bunch of money in the bank, and now you're going out to do a drill program that's quite different than what you've done so far. I would characterize your previous drill programs as having been fairly safe. Like you were pretty close to known gold, you were expanding things that you knew about. And now you're doing something completely different. So I guess, how do you feel about that? Is that more exciting for you? Is it more scary for you? Do you think that it changes the story a lot for your investors? Does it change the scope of what's going on at the asset?
We spoke, I think, we spoke in March or April. And I recall saying to you at the time, in our business, you have to be prepared to stop, and not get too excited about things. They're never as bad or as good as you think they are. And you just have to be, prudent and make long-term decisions. And I think that's what we've done through the piece with Revival Gold. We have a lot more flexibility now, having, completed a decent sized financing a couple of months ago through BMO. And it's a great endorsement of the work we've done to date, but it also gives us an opportunity to really step out beyond resource additions to really blue sky exploration. And that's what we'll get into at Rabbit. It's a very exciting target, 2 to 3 kilometers south of the footprint of the existing mineral resource within the Panther Creek shear zone. The last time we did this last year, we stepped out 1 kilometer, not quite the same distance, and we hit. In fact, we've hit on every drill hole we've drilled at Beartrack Garnet, save one. So now we're really stepping out here, and November, December, January, those are going to be exciting drill results coming out from Revival Gold.
I mean, you're talking about a project that, like you say, was a significant producer in the past, and in order to retain that kind of ranking or opportunity, yeah, you need to step out and show opportunity of scale. You got a good 3 million ounces. Those 3 million ounces are currently divided oxide and sulfide. How do you, when you're explaining the story to investors, how do you capture the two sides of the story here? Is there one that you like more than the other? Do you think they're both equally important? Do you think there's more upside in the oxide or the sulfide? How do you bring those two pieces together?
Yeah, well, I mean, I'll pick up on maybe some of the themes that Chad spoke to earlier, which is, I think what he was saying was you chase economic return. And as a mining engineer, certainly that's where I'm focused on economic return. And you can get economic return out of mill material. You can get economic return out of oxide material. And that's where our focus lies. Here we get our cake and eat it too, because we don't just have to build a big mill project. We can do effectively a phase 1 with a leach project. And then we'll roll into the mill project in due course. Now, if a bigger company comes along and we wind up in a more fully financed pro forma company, my guess is they'll just build a mill. But for Revival Gold and where we stand right now, hell, why wouldn't we pursue a potential $100 million, 50 to 60,000 ounce a year producer in the oxides before getting into the big 300,000 ounce a year potential of the mill project.
Especially because you're sitting on an asset where there's already an ADR facility and leach ponds, and there's a bunch of infrastructure there that would need things added to it, but gives you a step up for sure. Now you opened a can of worms there talking about M&A, talking about majors being interested in Revival, but that conversation when it comes to Revival isn't necessarily a one-way street. I mean, you have a history with Kinross where where you were part of a team that, went through a very significant growth phase for that company. So you're very comfortable on both sides of an M&A table. How do you capture the M&A side or potential for Revival Gold? I feel like when you and I chat, I always come away wondering, what kinds of ideas is he really contemplating? It always leaves me curious.
Yeah, well, not to steal the show here with a whole discussion on M&A, but bottom line, we want to make money for our shareholders. We see lots of opportunity to do that organically. But, as your panel guests illustrate, there's a lot going on in the exploration development sector right now. And there's a lot of, I think there's a collaborative feeling among some of the folks out there. There's a lot of capital, it's true, but we've also got a lot of companies. And if we can do some combinations that are value enhancing for shareholders and risk reducing, that's got to be something that we spend time on. And we have that ability, as you point out.
Gotcha. All right, thanks, Hugh. I will move on to Nick and revisit some aspects of the TriStar story here. First of all, I mean, you did a nice job, I think, of breaking down the different planks of what you're doing right now. And one of those planks is taking a really strong PEA and turning it into a PFS with money that's coming from Royal Gold. So that's great. Now, usually when you go from PEA to PFS, something gets weaker because there's more engineering and the costs are more costed and whatnot. But just based on gold price and FX alone, that doesn't look like it's going to be the case here. Are there any other outstanding things that you expect to change as you transition to the PFS? Or am I right in expecting that it will be as good, if not stronger, a study than the PEA?
It's a good question. It'll be, as a study, it'll be just as strong. There's no doubt about it. As you suggest, with the metal price moving up significantly higher, we haven't even set the price we're using for the PFS yet, but I mean, it'll be higher than the $1,250 gold we use for the PEA. And, and the exchange rate changing from 3.8, I think we used before, to 5.3, 5.4 now, all works massively in our favor. We have done analysis of costs in country recently again, and we haven't seen any scope creep in or cost creep in that. There's always a little bit of scope creep as you go from PEA to PFS. That's happened in every one I've ever seen. So I'd expect a little bit of that, but nothing material. So in general, I think it's a pretty good guide of what we're going to see. The one big unknown is, with a high metal price, how much more low grade material becomes possibly profitable, and what that does to the mine optimization plan. Do we go from a 8,000 ton a day plant to a 10,000 ton a day, or does the mine life extend out? Those sorts of questions will be answered once we get our sort of hands on the resource block model and the optimization programs and can start tweaking it.
Gotcha. Yeah, that makes good sense. So, I mean, we have a PEA going to PFS that I'm reasonably confident is going to be a positive step for the company. We have expansion drilling. TriStar has shown repeatedly in the last few years that you can find more of the same mineralization, and there's good targets for that. You have some deep drilling targets that have the potential for sort of splash, I might call it, if the theory about gold accumulating in some of these deep targets continues or pans out. Like we say, you cover the spectrum from sort of pre-discovery all the way through to PFS. What is TriStar's biggest risk or weakness? I usually try and ask a question specifically about that because I've usually identified it. But in this case, I'm going to ask you what it is because I'm not exactly sure.
I don't know. When I think about it myself, obviously I do the management takeover, so I'm fairly invested personally in the company. I see the downside risk as effectively the way I think of it is the PEA basis moving into a PFS. So the risk is that all our exploration doesn't come to anything, and that's what we have, and even that's significant enough to be really exciting. I think infrastructure-wise, permitting-wise, I mean, you can always look at delays in permitting in any jurisdiction, but we're in a great location for permitting. We're in a great location for infrastructure. politically, things go strange in every country in the world these days. Again, that could cause a delay somewhere, anywhere. But it's not one that concerns me right now where we are. So really, I sort of feel like we have a solid base underneath us. We've done enough work to do a lot of de-risking. So we sort of know we've got our arms around, you know, like the 1 million ounces or so that came out of the PEA. And it's really, can we go up from there, or is that it? So that's the downside to me, which is still good.
Yeah, for sure. And as we get into an asset that's got a PFS on it and has this exploration upside, I mean, certainly who might be interested in this project is a question that arises. Given, I mean, it's got a good scale. Given the jurisdiction, do you have, what comments do you say when people ask you what majors would be interested in setting up shop in Brazil, or who are already working in Brazil or in the area, or would be comfortable? What do you answer? What's your answer to that?
Well, I always answer there's like about this half a dozen to 8 or 10 maybe companies in Brazil who would be natural, who would have the ability and the size and the teams to help build TriStar or build Canasil Resources in one way or another, either as a partner as ours or as an acquirer. And then if our exploration is a little successful and we can move this up to a project that's producing not 130, 150,000 ounces a year, 200,000 ounces a year, then it's a big enough project for an intermediate to move into the country. So there's a lot, but there are about, I don't know what the number is, 6, 8 groups in Brazil actively mining or have been there a long time, with teams who have the money, have the ability to run a mine like this, and it would make sense in their portfolios. And we know all of those groups.
Absolutely. All right, thanks, Nick.
You're welcome.
Bauman, you, I mean, Canasil certainly has a fairly large portfolio of projects. You've got projects in BC, but the real focus, in my estimation at least, is in Mexico and is in Zacatecas and Durango, where you have been working, where you and your team have been focused for a long time now, on the order of decades. I know when I talk to you, it's clear that you're really excited about the potential at both Nora and La Esperanza. So can you just try and describe, given the number of projects that you've seen and worked in this part of the world, what is it about those two projects that gets you so excited?
Well, first of all, I think the locations are pretty amazing locations. Nora in north central Durango, it's sitting right on a trend and belt of major deposits and mines. It's sitting 50 kilometers west of SSR Mining's Pitaria deposit with 500 million ounces, and very similar type of environment and geology. All the projects have been chosen right from the start to have excellent access, infrastructure, working conditions, etc. Obviously, Nora for us is an earlier stage project. Hasn't had as much work done on it, but it took some time to assemble the land package and get going on it. With just a combination of what we see there. You have the veins and you have high-grade outcrops. The mix of metals are a miner's dream. If you look at those surface outcrops, or even if you look at the intercept we have in hole number 1, it's narrow, but 1.8 grams gold, 440 grams silver, 2.5% copper, 3% combined lead and zinc. I mean, just the lead and zinc or the copper will eventually cover the entire mining and processing cost if you come up with those kind of grades in a deposit. And you can get the gold and the silver at zero cost or negative cost. So it's this type of thing where you have a project that has an excellent location, you have the style of mineralization, high-grade mineralization, that's going to be very attractive to mining companies, that gives you the impetus to try to look for this. And if you can build up volume there, and if you can build up a resource, then that's a really attractive takeover target. And we're an exploration company, we're not a mining company, we don't pretend to be a mining company. Our exit strategy is to develop the resource and sell it at a premium to mining companies who are interested to take it on and develop it. And there are plenty of those located around both Nora and La Esperanza that would be very interested. The same applies to La Esperanza. Now, La Esperanza is relatively de-risked. It's had around $5 or $6 million of expenditures on it over the years. It has over 10,000 meters of drilling. But we're identifying these ore shoots, which are very similar in average grade to Pan American Silver's La Colorada mine next door, 35 kilometers to the east. So there they have over 100 million ounce proven and probable. The geologic system is unbelievable. They've done some recent exploration and finding these skarn systems. They trace the veins down to about 1,000 meters. And then they have the skarn systems below that. So now the sort of indicated level at La Colorada is going up to over 500 million ounces. So you can see both projects, Nora and La Esperanza, are sitting 30 to 50 kilometers away from 500 million ounce deposits with similar styles of geology. So that's very compelling. But La Esperanza in particular, you're getting the same grades as they have at the upper levels of the veins, average grades as the upper levels of La Colorada, with very nice widths to them, in fact, wider widths. And now we have the gold coming in. And this again is a system where the lead and zinc will pay for the mining and processing. And you can have silver at zero cost. I mean, these will be, if we can, these are all ifs, because we're just an exploration company, we don't have a resource yet. But if you can develop a resource with those type of grades, with that kind of a system, that's the type of thing that's extremely attractive to mining companies, because it's totally impervious to any kind of price movements. It'll be viable at $10 silver, it'll be stellar at $30 silver, at $20 silver. So this is the excitement about these two particular projects that we're excited about. Now, you know, the others in the stable too. I mean, you asked about which are your favorite kids, and you know, you just have to, when you have a number of them, you just have to pick and choose which one you advance earlier, later, etc. But these are really projects that over the years, as you said, over many years, they've been chosen with a lot of care and with rejecting a lot of other candidates to keep these in the portfolio.
Right, gotcha. Focusing back with my second question on your new results from Nora, I mean, you described how the results themselves, the indicator minerals, and various other indications make you think that you're pretty high in the system. Are you changing your drill program going forward based on that idea?
We're not really modifying the drill program significantly because of that, because we're already drilling below those two holes. The idea is to look at the stratigraphy and see where you are. Are you past the favorable zone for mineralization, or are you within the favorable zone for mineralization? And that's what those evaluations, both in the drill core and what we're looking at, show us, that we are right in the ideal favorable zone. And being high in the system for us indicates that you have a system that hasn't been eroded, hasn't been wiped out, and has got a lot of potential going down for exploration. Now, these vein systems, typically, as everybody has looked at the long sections on them, they occur in chutes, which are different angles, and they pinch and swell, and they have high-grade zones, low-grade zones, and you can literally be 5 or 10 meters away from a fantastic wide high-grade intercept and have a pocket that's returning low results. So the whole idea with these and the main consideration or concern that we would have is just to have the ability to keep drilling, because we've done enough studies to know that the projects have a lot of potential. You just have to be able to pick at them long enough and put enough holes in to start identifying and getting oriented, as we've done, let's say, at La Esperanza, after about 10,000 meters of drilling, and then you're off to the races. So that's the question, just to be able to persevere and keep going at them. And of course, you know, in the meantime, if you do see this complete duds coming, then you drop the project. You know, we're not wedded to any one project, and we have enough of them to work on. But you look at the drill holes right now, even these first two, with the results, we're not drilling country rock. I mean, the breccia zones, everything's altered, everything's chewed up, lots of faults. There's a lot of activity there that indicates to you that you're within a very strong mineralizing system. So we keep our fingers crossed and keep going.
I got a question in from a viewer about the metallurgical results from La Esperanza from 2016. And that the market didn't like in particular. Could you revisit that side of the story?
That was not from La Esperanza. That was
That's
from Sandra Escobar.
That's what I
Which-
thought, right?
Yeah, which we have since sold to Pan American Silver. And again, that's another one of those big projects. It has around 6 different systems on it. That was one particular zone on the southeast corner that the 30 million ounce resource of disseminated silver was developed on. And that was made up of high grade feeders that have absolutely no metallurgical problems at all, and disseminated mineralization that was had some silica encapsulation. So when you applied that to the 30 million ounce, to the larger resource, the recovers were negative on that. So I think that question is relating to Sandra Escobar on that specific zone that was drilled in 2016.
Gotcha. All right, thanks, Bum. And I'm going to move on to Brian, because we've got to wrap up in about 10 minutes here, so that the viewers, the loyal viewers, have a chance to take a break before we all move into the final session of the day. So Brian, you have a bit of a challenge when you're trying to tell the story of the Miller project, because there's several different kinds of mineralization that relate but are quite distinct, and that return very different grades when you hit into them. So first of all, can you just tell us, like, without even naming zones on the, well, you can name zones if you want, but what are you've got veins and you've got mineralized cyanide. So those are the 2 main kinds of mineralization at Miller, right?
Right. I know every hole is a lot of news, like any exploration program. We're still getting our minds around exactly what's going on, but it's pretty obvious that the cyanides, particularly the allied, because that's where we've done most of our drilling, is key and central to what we're seeing so far in the mineralizing system. Gold occurs within the margins and the periphery, but also well within the bowels of the cyanide and high-grade veins and discrete veins, as well as on the margins and the more disseminated stockwork style mineralization, everything you would expect kind of in an intrusion. So we're happy to see all of this. Hole 49 was a departure for us. We got a nice high-grade zone outside, just in the volcanics with pyrite. And you can see from the geophysics, we got a very broad chargeability anomaly associated with these intrusions that are central to that. So to say where it all is right now, it's quite difficult in trying to put it all together. But so far, what you see our modeling suggests that we've got these horizontal, flat line horizons or vein structures that go through. A number of them appear confined to at least now to the cyanide, but we haven't drilled out board of it, so we don't know. The number 1 vein is the only one that's really cuts through everything, and that's a very big, well mineralized structure that varies from quartz and tellurides and high-grade gold to almost massive sulfide and breccia. So you're seeing a lot of different things going on here. And Bowen hit 10,000 meters of drilling. That's kind of what we got right now, and we're just now getting into, like, okay, now we got a good idea. And this last pit program was basically helping us to try to key in on some areas. And I'm hopeful that the drilling that we see on Planet is going to bear fruit for us as well.
Right, absolutely. I mean, I think even in just your news releases, I think the fact that you're starting to understand the system more is becoming clear. Things like the models and graphics that you're putting in the releases are like, oh, okay, that's how this ties together with that and whatnot. And I say that as someone who sort of tries to understand these things for a living. In that sense, I think, the complexity of your system is both an advantage and a disadvantage. It's a disadvantage because it's hard for the market to understand, to put the results in context. What is the context? What am I supposed to be getting here? But the advantage is this is clearly a strong mineralizing system, because there's gold in all kinds of forms, in all kinds of places.
That's the bottom line. You're exactly right. And yeah, I've struggled, believe me, I struggle presenting this to people, trying, in a way that kind of makes sense. And like it's early days, but I'm really thrilled by all the drilling that we've done. We're hitting new zones, we're hitting new styles of mineralization. We've got a lot of coarse visible gold on the property. Every rock type is mineralized, short of the gabbros, which we got a large gabbro that has not been drilled. They're just associated with the Catherine Fault. And then we also have a large quartz-telpar porphyry, which is a big structure immediately west of the Allied. So these things represent large structures, and there's a lot of mineralization. So yeah, we just need to drill. We just need to keep drilling.
Yeah, and certainly, so you have the next drill program that's coming out, sorry, is it 5,000 meters? And and then you can hope that with another 5,000 meters testing of another variety of targets, you can just keep building that model and making the story clearer, both for yourself as you try and track it all down, and for the rest of us as we try and wrap our heads around, yeah, what this opportunity looks like. There's clearly gold, but how much and where and what.
Yeah. No, exactly. This next go around will have the benefit of the geophysics. So we've got some very high definition 3D IP, gravity mag. We're still, we're going to have Goldspot actively involved with helping us find the model and develop drill targets. So yeah, I'm really excited about the next go around. We're exactly where I hoped we would be after the first phase of drilling. So we'll get the results, and yeah, we just want to get back at it here with a much clearer idea of what's really going on here. But clearly Miller's got a very large Kirkland style signature. It's got the right style mineralization. It's got the right grades in places, and it's got size potential. It's definitely got size potential.
Absolutely. Well, good luck out there. And with that, I think I'll wrap it up. We're just a few minutes early, but I think that that's okay. These days are full of information, and a few minutes extra in the break, I don't think anybody's going to bemoan me that. So thank you to everyone on my panel. I certainly appreciate you all taking the time to give us all an update on your opportunities and your plans going forward. A lot of drilling, a lot of activity, and a lot for us all to keep up with. And thanks to the audience for your questions, for your attention, and for your interest. And if you have any questions, it's easy to find any of us to ask them. So with that, we'll all sign out. Thanks very much.